Here we are on the New Zealand dollar 15 minute, and we have a head and shoulders that's set up. I've been waiting pretty much all day for my entry on this, and I was hoping we were going to get a better risk to reward, but it's turned out just to be a 1-to-1 risk to reward. So 17 pips for 18. I've just entered based on a higher high, higher close candle. Now let me remove the orders and talk you through this trade. So yeah, I'm gonna have to delete everything as usual. Okay, let's go to the dailies and show you why I'm looking at head and shoulders. So let's put a structure level in where we had the close of the candle on Friday, because today's Monday, and let's zoom out, and as you can see here on the dailies, we've had a very large wick there, which we traded with inside that wick. We have come into this rejection level, and then we've got an area here which hasn't been adhered to too well. So not a phenomenal place on the dailies, but we can do a couple of things here. We can actually do an inversion, and we have a price that came into a 127. We can do an extension to here. Price came into at 127 again, and if we drop down to the 240, we have gone oversold as well on the daily time frame. You can see here that we've actually had did we actually get higher close? No, we didn't. Let's go to the 60. It was on the 60 that we had the higher high, higher close, which is just there. So what I'm looking at here is just a small reaction. We came down for the left shoulder, we came down for the head, we then put in the right shoulder here, and we've gone higher. Now a couple of things here is we can look for targets based on an AB equals CD pattern, and if we do this, you can see we've actually fallen short of that AB equals CD pattern. And in fact, just let me go to the 15 minute, which is where you can more easily see the head and shoulders. Let me do that AB equals CD pattern again. So you can see we've actually fallen short of it. It comes in there. But if we put on a fib, we can actually see quite a bit higher. We have a 618 fib up there, and also I would be looking at taking targets anywhere within this zone. So my entry was this higher high, higher close candle here. If I bring back on the orders, you can see that my stop was below the outside return just here. It's an ATR below it, and if we make this red, and then we're going to make targets which are just beyond the 618 fib. I'll make those green. So what happened here then is we had a level neckline, a horizontal neckline, and so I had to wait for the violation to the upside, wait for the pullback, and then anywhere within this outside return I'm just looking for a higher high, higher close, and we literally just tapped it right there, and it offered me a 1-to-1 risk to reward, which I've gone ahead and taken. So 17 pips of risk for 18 pips of reward. Not a phenomenal trade by any means, and I am playing for an extension a little bit beyond that AB equals CD pattern. So if we do actually make a new structure high here, I'll then actually reduce down the risk to underneath this, because this will then become the new outside return. And you know that I have 4 parts to my trading. Philosophy is psychology is the first one, and risk management is the second one. So whenever I can reduce risk based on a valid reason, and this if we made a new structure high here, would put me in trend continuation. I can then reduce down the risk to around this level here. So maybe just 8-9 pips of risk, something like that. So there we go, Head and Shoulders, only a 1-to-1 risk to reward, but high probability trade. And we're back for a little update on this trade, and as you can see, we have now well, we've gone back into profit. What actually happened here is this is where we bought at the higher high, higher close, literally right on the outskirts of our entry, and we rallied up. We did not make a new high, we came back down, and it may not look like it here, but we did not actually close below this low here. We actually closed at that level, held it, put in a high high, and we've been working our way back up here. So that level has actually held. Our stop has come nowhere near to being tested. We've come nowhere near this outside return. It's looking good for us to continue here up to targets. The only thing I will say is that I wish I'd actually, maybe a wish isn't the right word, but I will use the word wish. I wish I'd waited to get a better than a 1-to-1 risk to reward, and the reason for that is I'm actually putting in a lot of work at the moment to increase the risk to reward based on certain setups. And what you'll find is that in 95% of cases you will always get a better entry than the entry you take. So for instance, my entry was here. There was a high probability I could get a better entry. Now, I'm not going to go into all the different things I'll look at for this, but it is something I'm trying to implement. But nevertheless, that look, we had our outside return here. We could have waited for the market to come a little lower, and just look at what we did here. Once we came back down, we never violated this level. We put in indecision, 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 and then a higher close. You could have very much waited for these two indecision candles here and said, right, there's two of them, we've obviously held this level here, let's buy the market up, and it would have made a dramatic difference. It would have made this almost a 2-to-1 risk to reward. So I'm a little bit disappointed with myself there, but I haven't, in all honesty, finished looking at all the various scenarios where I can do this. I have quite a good understanding of when I can and when I can't. In fact, let me clarify that. I know when I can't do it, because there's a certain setup that happens that I know that I really should buy once I get my signal. This was not one of them. This was pretty much, you can wait here for a better entry. Anyway, I've rambled on long enough. We're currently up 5 pips. Let's see if we can get up and get those targets. And we're back for the final part of the video. The time is 10:25 at night. I was just actually going to get myself off to bed. I just wanted to watch the market settle down just after the 2200 hours changeover, and we saw a spike, and there we go. Targets have hit for 17 pips. What a lovely Head and Shoulders. Wish I got the better risk to reward, but nevertheless high probability trade as usual. If you do like the video and you haven't subscribed, please go ahead and do that, and of course give it a like.